Good afternoon. Welcome to the Bremer Bank webinar series. My name is Jim Mulroney. I'm Director of Commercial Banking at Bremer Bank, and we're thrilled to have you with us today for the Bremer Bank webinar. We do these series as a way to effectively and efficiently bring valuable content and information to our clients to help them continue to thrive. During today's event, we'll effective working capital strategies to empower your businesses, your nonprofits, or governmental entities. And with that, we'll jump right into our content. I'm thrilled to introduce Sheila and Sarah from the Bremer team, who will share a little bit more about how we can leverage digital integration to drive efficiencies in your respective organizations. So first, Sheila Dowling is Treasury and Commercial Payments Sales Director for Bremer Bank, officing in St. Paul, Minnesota. Sheila has over 18 years of experience in financial services, specializing in delivering of tailored cash management and treasury solutions. Her expertise spans a wide range of industries, working closely with finance teams and senior executive teams across industries to design and execute custom treasury and cash management solutions. And Sarah Hartzong is Senior Commercial Product Manager at Bremer Bank. In her role, she oversees the development of digital integration solutions and is dedicated to helping businesses grow and thrive. Please join me in welcoming Sarah and Sheila.
Thank you, Jim. As you just heard, now more than ever, organizations are looking for ways to overcome labor challenges, increasing cost of doing business, and rapid technology growth. Most clients are still using manual processes today. In fact, in your registration, we asked what percent of financial processes are manual today. 80% of you responded that at least 50 to 100% of your processes are still manual. These tasks are often siloed and repeated, leading to inefficiencies. Now I'll highlight a few key areas where we can continue to see manual processes. Data entry and matching, invoice approval workflows. We see those routed manually, maybe by email or even walked across from office to office to get the appropriate approvals. Payment processing, we still have clients that log into the bank today and are manually keying in vendor payments. Reporting can be difficult for many clients because you're compiling data from different systems to create custom financial reports. And lastly, from budgeting and forecasting, we see organizations typically still using Excel for this process. These manual processes not only take more time, but also increase organizational risk. This is why more businesses are turning to digital integration. Digital integration is an ecosystem that seamlessly connects your tools, systems, and data, enhancing security, reliability, and scalability. Digital integration can help you do more with less, unlocking efficiencies across your organization. Now let's review the benefits of digital integration. Digital integrations tools can help you reconcile faster, streamline your processes, including automating your accounts payable and accounts receivables process. Can speed up reconciliation. Transactions can be automated daily or even in real time, providing an accurate view of cash flow. It helps increase security and reduce fraud, reducing manual entry and human error, which leads to no more manually entering in transactions or even logging into the bank. Freeing up valuable resources allows your team to focus on more meaningful and strategic tasks. By leveraging digital integration, you can streamline your operations, enhance security, and free up your team to focus on what really matters, growing your business. Sarah, can you share how organizations know where to start and what outcomes they can expect?
Yeah, thanks, Sheila. On the next slide, we have a little bit of a model. Sheila started to talk about some of the benefits of digital integration, and this visual really helps organizations think about where they are today and how to plan for digital transformation over the long run. So you can see on the model, we have manual processes sort of illustrated on the left-hand side of the continuum. The digital integration continuum is what we call this visual. And some think about batch processes in the center and your automation or integrated processes on the right. You can look at this really quickly and kind of identify where your organization falls on the digital integration continuum today. As Sheila mentioned, around 80% of you said that 50% or more of your processes are manual today. So I hear a lot of folks probably falling towards the left-hand side. There was even a couple of brave souls who admitted that 100% of their processes are manual today. You're not alone. The key is really that, to figure out where you are today, start where you are and build this transformation and incremental improvement into your business strategy. Maybe it's your annual plan, maybe it's a 3 or 5 year plan, but start to plan out how you're going to shift your business towards the right along the digital integration continuum. And, Sheila's gone over some of the benefits in the previous slides, but really, as a business leader, when it comes down to what does this mean for you as your business matures and shifts along to the right along the continuum, it's better use of human capital, productivity being a big lever. It's control over your processes and over your finances, right? We want to help you speed up your receivables. We can get paid faster and then get really, really tightly controlled processes around your payables, and all while reducing hours required to execute these tasks. So again, it's these operational efficiency gains that you're going to realize as you shift from the left to the right, all while adding security, reliability, and scalability as your business grows. As if we want to maybe dig into a little bit more of an example of this on the next slide, this sort of illustrates what a typical manual process would look like today if you are thinking about the context of data delivery or retrieving your transaction data. Typically, this is a multi-step process, whether you're manually entering those transactions or maybe downloading a report from an online banking system. Let's be honest, it's typically pretty labor intensive. It's typically very reliant on spreadsheets, and it can be prone to human error, right? This does not provide an ideal level of visibility to cash flow. If this is how you're working today, your team is probably waiting until month end to maybe download those transactions or enter the transactions. It's probably taking them a couple of days to reconcile accounts. They may not be closing the books until the middle of the next month. Again, that manual entry could be happening. These transactions might even be manually keyed into the system. We know that it takes upwards of 45 to 60 seconds per transaction to enter manually, not including any research that might be required. So that's real money. That goes back to that comment earlier about productivity and really leveraging your human capital. Not an efficient way to run the business. Those 45 to 60 seconds add up really fast. It's frustrating for team members as well, right? So we want to be able to add efficiency to the operation, help the team shift away from that month-end big bubble of work and potentially shift into a daily or weekly reconciliation cycle. How would that impact your visibility to cash flow? What additional business outcomes could that enable? We see implementing digital integration tools as really being able to help you optimize your resources and shift away from what we call swivel chair accounting in multiple systems or multiple processes toward working inside of fewer purpose-built systems, or in an ideal state, just interacting with your accounting system or your ERP, your enterprise resource planning system. So if we kind of take a look at what that integrated workflow might be, you can see the idea is that we keep the accounting team completely in the ERP system and avoid sending them out to outside systems. We are taking the once multi-step system and shifting it towards the right side of the continuum. This particular example, this particular tool called Bank Feeds is a tool that allows your financial data to flow automatically and securely from the bank into your accounting system. And this integration can provide pretty close to real-time updates on transactions, right? So This is where you can start to make that shift towards daily reconciliation, and really keeping financial records up to date without a ton of manual entry, if no manual entry at all. It also eliminates the need to download statements or transform data, in Excel, for example. And again, keeps the team entirely within the accounting system. By using a service like bank feeds or some other integration service, you can ensure that your data is automatically and securely being transferred, so no opportunity for human error, and then just otherwise streamlining your processes. So big benefits here, again, back to that human capital piece, certainly in the context of operational efficiency, security, reliability, and scalability. But that's just one example, one service. I'm going to turn it back over to Jim, actually, and we'll maybe discuss a little bit broader strategies for integrating your systems.
Sarah and Sheila, thank you so much for giving us that overview of the digital integration continuum and some of the productivity ideas that we've brought to clients and prospects across our territory. A couple of pre-submitted questions that I'll throw out there for our discussion now. And just Sarah, coming over to you, could you share a little bit of why did Bremer develop twofold? One, the digital integration continuum, the construct, but then also some of those more complex, sophisticated automation tools. So once again, why the digital integration continuum on the screen in front of us, and then also kind of some of those more complex integrated solutions on the right-hand side, the right column.
Yeah, great question, Jim. So, we see customers, our clients, falling into every single space along the continuum, and at times some of those conversations, sort of like they start with despair, like, I don't know how to start or where to start or how to make this journey. And so we created the digital integration continuum as a really simple way to quickly identify and relate to where you are on the continuum today and start to visualize a path for making incremental improvements to your business, right? This is not a big bang typically. And as every business is different, every business has different needs. And so the journey doesn't look the same for everybody. So having this really sort of high level roadmap or guide in how to think about that journey, we found really helpful. Why did we come up with the tools themselves, bank feeds, for example? We heard our customers telling us about frustrating experiences that they had with data delivery or data transformation. We've partnered with customers on their business processes and seen where a company may have 2 or 3 or 4 different sort of plugins to their accounting system or their enterprise resource planning system that are critical pieces to get the data from one system to another. These are frustrating experiences for them. Frustrating experiences when, the connection breaks. We hear about screen scraping as a really common solution where banking data is delivered into accounting systems that's enabled by a third party, but they require frequent re-authentication, logging in, and so that becomes a really frustrating experience. So ultimately, we were trying to help move past that friction and create a much more seamless and safe experience for our customers.
Thanks, Sarah. So if I'm a CFO or a finance director on the line right now and say, I see myself in a couple of these different boxes, and I definitely want to move to the right. Sheila, coming over to you, where do I get started? Where does a business, a nonprofit, government entity, where do they start to get on that path of moving to the right on the integration?
Great question. Sarah kind of alluded to that a little bit, but first it's really identify and assess where you're at today. Where do you want to be? And understanding your current process, evaluating the tools, the systems, and the partners that you have, and can they get you where you want to be? And ultimately, sometimes Sarah said it could be in stages because maybe the ERP or accounting system that you're using today can't get you all the way there, but you can partner with your bank partners or with outside pieces to connect that data and bring that together. And so it's really kind of evaluating where you're at today, and then do you have the right partners in place to help you get there?
So Sheila, just to follow up, on that banking operation on the left-hand side, there's 4 different items there. Is this I have to do all 4 of these at the same time, or can I pick and choose and prioritize? Any advice you'd have on that, in that regard?
We do have some clients that want to do everything all at once, but typically it's a phased approach depending on needs. Just like Sarah said a little bit earlier, it's really dependent on needs. Sometimes we see organization, we have a retirement that happens in accounts payable where maybe originally they were going to focus on the receivable side, but that happened. So now we're switching to the accounts payable side, and we're really trying to streamline that process as the individual is looking at retirement over the next few months.
Thanks, Sheila. Great question submitted here regarding one of my favorite topics, enterprise resource planning systems, ERPs. Never in my career have I had more conversations about ERPs. And so, Sarah, I'm going to come over to you, kind of a twofold question. I'm going to build off this submitted question. One, where is the interconnection play between the ERP and some of these tools and strategies that are on the screen in front of us? And then also what I'd tag on is, where in the life cycle of an ERP do I have these conversations? Is it when I'm going out for RFP or considering an upgrade? Is it when I'm moving from a mainframe to a cloud? What's the right time to engage conversations with a bank partner like Bremer to leverage that investment with a digital integration strategy as you're sharing with us today?
Yeah, great. This is a great question. And as you alluded to, it is very, very common today for us to hear about companies upgrading or shifting their ERP systems. Shifting to the cloud is top of mind for a lot of people, and so we hear about many companies exploring new ERP systems or are in the process of or have recently changed their accounting or enterprise resource planning system, ERP accounting enterprise resource planning. So the right time to engage your partners is very early. And why that matters is because different ERP systems have different capabilities. And so this is going to play exactly into your pathway and your journey across the digital integration continuum and what you're able to go ahead and take on or what can be optimized based on that ERP selection. We actually have out on Bremer.com right now, we have a couple of different business insights articles that give a little bit of a primer on this topic, things to think about when you're choosing a new ERP system or when you're preparing for that journey. What I would say is really be mindful of your current processes and take the time to map out those processes and just think about where some of the pain points or the friction points may be today. What you want to avoid is picking up a process that isn't optimized and just dropping that into a new system. That's not going to get you the best result. It's not going to optimize your system. So pull on your banker early to help think about and map out those processes. This is something that we do very frequently with our customers and our partners, kind of walk through the financial processes, the accounting processes, and start to think about, what are the needs that you have in a new system that are not being met today? What are the friction points? And how can these new systems really help enable that operational efficiency, security, and enable you to grow over the long term?
Jim, if I can just jump in for a few seconds. Sarah noted about just getting us and engaging us early. And that includes when you guys are building out your RFP and really interviewing these organizations to decide what's the best fit moving forward. How can they also integrate, right? A lot of this is integrating with your bank partner. And so engaging us early to help you identify. A lot of times they have modules that aren't included in your upfront price that you're going to get. So if you can negotiate them upfront, there are modules that can help automate some of these processes and procedures that we're talking about here. So again, as early and as often as you want us to be engaged, we're happy to do so.
Thanks, Sheila. Hey, on the topic of ERPs and technology, obviously in our world today, whenever you talk about technology, security is the right after that one. So I'll throw this one out maybe to Sarah first, and then to Sheila. Sarah, can you talk a little bit about the security infrastructure or ideas to think about as you move across the continuum? You know, we talked about the highlighting the increased security, but it's also trusting the technology partner on the other side that they have that security built out to keep my obviously very important data secure. So comments and thoughts on the security infrastructure as you go on the right on the digital integration continuum.
Yeah, great question, Jim. And without going down a complete techie rabbit hole, what I would just say at a high level is to really be conscientious of asking asking this question essentially of any partners that you're sort of interviewing. You know, when what you don't want to end up in is a system where you're, you know, maybe giving your online banking credentials to a third party and exposing those credentials to somebody unnecessarily to deliver data back to you, right? So there's a lot of fintech solutions out there today. There are a lot of third-party applications that you can plug into your ERP or your accounting system. But you know, what you're looking for is that direct data connection, right? So with an API-enabled connection, you have a very secure connection that is established. You don't have to have your team entering credentials over and over. Or with a FTP, a file transfer connection, that connection is established and it happens programmatically on a set cadence. You don't have to continue to expose credentials to a third party. So just you know, ask questions about security, ask questions about how the data is transferred in and out. And again, you know, your banker, your relationship manager can be a really good guide in either kind of walking you through some of those options or connecting you with people who will definitely have the answers.
Well, Sheila, coming over to you on the topic of this is another submitted question regarding workflow. So if I have a legacy workflow process for AP or AR, over on the left-hand side of the continuum, how do I need to change the workflow process that I have historically to get to the integration or move towards the right? Or what are the best practices as you know to change it? Because obviously that's a lot of change management and personnel and who's doing the body of work. You know, how do I just drop in the integration or do I have to massage the process as well as doing the integration?
So typically you're not going to change the process right away, right? You're going to identify where you're at. There could be steps that need to be taken, but a lot of times it's really how do we get the data? The biggest piece is getting the data out of your existing system. How do we do that? And then getting it over to your bank partner to be able to take that and run with it. So most of the time it's really just gathering that data and making sure we have the right data up front. And that is where some of the work is done, is making sure that data is getting over to us.
Thank you. Sarah, coming over to you. As far obviously all this transformation requires a lot of investment of time, energy, and resources. So there better be an ROI. And we heard about productivity as a key to navigating through the uncertainty. Can you share a success story that we've experienced with a customer of ours that's made this integration to drive a valuable ROI or productivity return?
Yeah, there's a number of them, but a couple that come to mind. We have a technology company that we work with who had been using a fintech to deliver data into their ERP system, and you know, essentially it came down to that reliability challenge. They were constantly having to re-authenticate, having to enter their banking credentials, and it became a frustrating experience. And so shifting that data delivery over back to Bremer, right? We're the source of the data, so we're in a position to really deliver that data well. It actually saved them a lot of hassle, a lot of friction on their daily reconciliation process. Another example, we have another complex company, multiple locations, many accounts, entering all of their transactions manually. On average, 7,000 transactions a month. That's a huge number of transactions, I know, but you know, you think about back to that 45 to 60 seconds per transaction, that the ability to automate that data delivery into their system and shift away from manual entry actually saved them about a half to 3/4 of a head count in terms of labor. And they were able to repurpose that labor to more strategic work and helping to continue to grow the business. So, that operational efficiency and reduction of friction, that's real money. That's real time, real hours, and there are a lot of great benefits from making this journey.
Great examples, Sarah. So Sheila, if we're on the line here and I'm like, all right, I drank the Kool-Aid, I want to get started. What does a customer of ours do next?
Again, we've shared this a little bit, but reach out to your relationship manager and your treasury consultant. We'll help you get started with the next steps and meet you where you're at today.
Awesome. Thank you both. I want to take a moment to thank Sarah and Sheila for sharing your expertise and insights. Thank you to all of you for taking the time to join us for the Bremer webinar series. We hope you found it of value. If something resonated with you today, we would ask you to reach out to your banker from Bremer to have deeper conversations. We can bring in additional resources, no matter what degree from the left to the right on the continuum that you want to go. Thank you so much for your time and your engagement, and have a great rest of your day.